Have you ever felt lost in the midst of an economic storm? That feeling of insecurity while the market fluctuates, and the news seems darker with each passing day? If the answer is yes, you are not alone. In times of crisis, many investors find themselves paralyzed, fearing the loss of what they have worked hard to achieve. But what if I told you that behind the turmoil, there are valuable opportunities waiting to be discovered? In this video, we will explore how to navigate the turbulent waters of volatile markets and find those pearls that can transform your investment strategy. You will learn how to identify stocks that not only survive, but thrive in tough times. Imagine being able to act with confidence, even when everything around you seems uncertain. What are the best strategies that savvy investors use to stand out in times of crisis? How can you take advantage of this volatility to your benefit? We will answer these questions and much more. Today, we will talk about how to turn fear into opportunity and how every crisis can be a hidden chance to reinvent yourself financially. Get ready to discover insights that will not only increase your knowledge, but also your ability to invest with safety and strategy, even in the most challenging times. Stay with me until the end, and together we will unveil the secrets of successful investing. Even when the landscape seems bleak, the future of your investments may very well depend on the decisions you make today. Let's begin by understanding what market volatility really means. Volatility is essentially the measure of how much the price of an asset can rise or fall in a short period. In times of crisis, such as economic recessions, wars, or pandemics, volatility can increase drastically, leading many investors to adopt a defensive posture. But here's the crucial point. Volatility is not just a sign of danger, it's also an opportunity. Imagine you are caught in a storm. While many seek shelter, the savviest investors see a chance to buy assets at reduced prices that can appreciate once the calm returns. For example, during the financial crisis of 2008, many solid companies saw their stocks brutally devalued. Those who were able to identify potential growth and bought during those tough times were rewarded when the market recovered. Now, you might be wondering, how can I identify these opportunities? This brings us to the first tool you need in your arsenal: volatility analysis. One of the main ways to measure volatility is through the VIX, known as the Fear Index. This index measures market volatility expectations over a 30-day period. When the VIX is high, it means that investors are expecting large price fluctuations in stocks. This is the time to pay attention. Animation about the VIX and its importance. Next, let's talk about how to change your mindset during these volatile periods. Instead of being swayed by fear, you should adopt a proactive approach. Changing your mindset is crucial. The first thing to do is stop thinking about survival and start thinking about investing. This means that instead of rushing to liquidate your stocks, you should prepare to buy. And here's a powerful strategy that many successful investors use: the buying the dip strategy. Buying the dip involves identifying stocks of companies that, while facing temporary difficulties, have solid fundamentals. When the price of these stocks drops, it's the perfect time to enter and buy at a lower price. A notable example is Apple. During the financial crisis of 2008, Apple's stock fell significantly. However, those who bought during those tough times saw their shares multiply in the following years. Growth chart of Apple post-crisis. Another effective strategy is diversification. Diversification is the practice of investing in a variety of assets to reduce risk. In times of crisis, having a diversified portfolio can protect your investments from extreme fluctuations. Think about sectors that tend to be more resilient during crises, such as healthcare, technology, and consumer goods. By diversifying your portfolio in these sectors, you can protect yourself against market downturns. And now, a quick pause to talk about something very important. If you really want to master investing in times of crisis and achieve financial security quickly, I've prepared something special for you. I have put together an exclusive link with highly recommended courses on finance, Bitcoin, cryptocurrencies, gold, millionaire mindset, and financial psychology. If you are committed to changing your financial life and learning from experts, click now on the link in the description and start your journey to success. Now, back to the strategies. In addition to diversification, consider exploring alternative investments. Investments in commodities, like gold, tend to be safer during periods of economic instability. Gold is often seen as a safe haven and can help balance your portfolio. Example of investment in gold during crises. Now, let's discuss how mindset and preparation are essential for investment success during crises. The investor's mindset can be the differentiator between those who panic and those who thrive. In times of crisis, fear can lead to paralysis, but successful investors learn to control their emotions and act based on data and analysis. One powerful technique you can use is setting clear investment goals. By having specific targets, you can stay focused and motivated, even when the market seems unstable. Additionally, practicing visualization can help prepare your mind for the decisions you'll need to make in stressful moments. Visualize yourself making wise and strategic choices, even under pressure. Visualization exercise for investors. Don't forget that a well-structured investment plan is fundamental. Having a plan not only helps guide your decisions, but also serves as an anchor in uncertain times. Review and adjust your plan regularly to ensure it remains aligned with your financial goals. Now, let's recap the key takeaways from this video. First, we understood market volatility and how it can be an opportunity. Next, we discussed strategies like buying dips and diversification. We also talked about the importance of having a strong mindset and a solid investment plan. By the end of this video, you will have not only a clear view of investment strategies, but also the mindset needed to implement them with confidence. Now, a call to action. If you enjoyed this content, don't forget to like, subscribe, and share with friends who also want to invest confidently in times of crisis. Inspiring message about opportunities in crises. Remember, every crisis brings opportunities. The difference between failure and success can be your willingness to act in difficult times. Thank you for watching, and see you in the next video.